Hey gang, welcome back to Time in the Market, the investing channel with a long-term focus, also known as the 23rd best investing channel in the tri-state area, according to my uncle. What a guy, really pepping me up. Today we're going to talk about Nintendo, and I'm sorry for not making a ton of videos lately. I'm going to try to make more, but work's been a real bee lately, so I haven't had time to do anything on the side, but now I'm back with another video. If you're not familiar with Nintendo, it is a video game company. They do a few other things, but mainly a video game company based out of Japan, traded on the Japanese stock exchange under some random ticker number as they do over there. If you want to buy this, you probably buy this through the ADR NTDOY. 8 ADR shares represent one ordinary share. If you do want to buy it through the Japanese exchange, I believe you have to buy this in lots of 100, which means you have to spend like $40,000 to buy Nintendo, which you probably don't want to do. But anyway, why are we talking about Nintendo? Well, it's had a rough couple of weeks after they announced earnings, after they announced the new Switch model, and really, they've gone from a high of about $80 to a low of about $60 in the last week or so. This was obviously after a very good year for Nintendo investors, where the stock pretty much doubled from the lows in March to more than doubled from the lows in March to the highs in March. Essentially, what happened is people stayed at home. They bought a bunch of Nintendo Switches. They bought a bunch of Animal Crossing, and things were hunky dory. And now that that's kind of changing, people are left wondering whether Nintendo is repeating the mistakes of the past and whether the Switch is kind of a one-time hit. And we'll see what happened after the Wii. That's the main risk that we're going to talk about today. But I want to talk about Nintendo in general. You can kind of see the Nintendo website here. Hey, it's Wario, not as cool as Mario. It's me, Mario. You got that guy from somewhere. They're a high quality gaming company, essentially. They don't make a ton of games, but when they do make games, people seem to love them. There is a love for a company that isn't there with a lot of other companies. People hate Nintendo rarely. People hate EA often. People hate Activision often, a lot more often these days. Activision, Blizzard, they hate a lot of these other companies, but they feel like Nintendo does things the right way. They release games that are high quality. They're not retreads of what they've done in the past. But the problem with that from an investor's perspective is they don't release games that often, right? They aren't releasing a Zelda game every year. Some of the, remakes maybe they are releasing every year, but the main series, you get a new game maybe like 3 or 4 years, right? There's a new Zelda coming out next year, and the last one came out in like 2018. There's a new Metroid coming out, I believe this year actually, and the last one came out like 19 years ago, right? So they release Pokemon games quite often, and sometimes those are kind of middling in quality. If you look at this new Pokemon Legend Arceus coming up, I don't know if I pronounced that right. It looks like a Wii game, and that's kind of the negative when it comes to Nintendo. Yes, their games are high quality, but they are first party only. That means they only release them on their own platform. They're not releasing it on the PC. They're not releasing it anywhere else, which really limits their exposure to people who own a Nintendo hardware platform, and not everybody does. And they are not coming out with games that often. And maybe that's a good thing, maybe that's a bad thing. If you are a Nintendo Switch owner, you're basically looking at mainly Nintendo first-party games, because a lot of third-party producers just don't produce for the Nintendo. There's some, but there's not a lot. A lot of the big games like Call of Duty, like Grand Theft Auto, they're just not out there on the Nintendo Switch. And the Nintendo Switch has essentially become hey, I either play Nintendo games or I either play indie games. And there's some in between that, but that's really the truth of it. And I do own a Nintendo Switch. Really, my wife owns a Nintendo Switch, and she bought one like last year when the things were maybe a year and a half ago, and she bought it because, one, she wanted to play Pokemon, and she played the new Pokemon, and she was kind of like, I don't really love it. And that's kind of a sign for me, because she's played a lot of the Pokemon games before. And as an investor, I look for stuff like that. Whenever people around me love something, I'm like, hey, maybe that's a good investment. And whenever people around me start not using that something, maybe I start to think, hey, maybe that's not that good of an investment. So like 2 years ago, I bought some Nintendo because my wife bought a Switch. She was playing Pokemon all day, every day. She was playing Animal Crossing when that came out all day, every day. My friends had a Switch. They were playing Pokemon. They were playing Zelda all day, every day. They said it's the best game ever. I was like, wow, that's something's going on here, and they've got something good. And that's kind of what happened when they came out with the Wii. So when I saw that, I was like, hey, something's going on here. But now, as I look at what's happening as the world comes out of this pandemic, I'm wondering if Nintendo is repeating the mistakes of the past by kind of riding this train for too long and not having anything to follow it up, and assuming that people will just do what they're doing continually and forever. The problem with the Nintendo Switch as a hardware is it kind of came out in the middle of the console cycle. The Wii U was a complete failure, which is their last console, which is why their financials were in the toilet, and we'll look at that soon. And it was a complete failure, and they basically had to revisit that and come up with something in the middle of the next console cycle. Like the PlayStation was kind of on its ending, the Xbox was kind of ending where it was going to be, and they were ready to roll out their new consoles, much more powerful consoles, in a year or two. And the Nintendo Switch kind of came out in the middle of all that. And because of that, it was kind of underpowered in relation to everything else. And that's somewhat Nintendo's thing. They don't really focus on hardware quality in terms of power and processing power and graphics output. They focus on uniqueness and niche gaming and stuff like that, which is why the Nintendo Switch worked, right? Because it was this handheld thing that people could play anywhere and also play on the TV, and it was very easy to use, had a lot of colorful games, a lot of good games, as is always the case with Nintendo, really. I mean, they are a high-quality game producer. I won't argue with that. I think they make a lot of good games. But that was also the case with the Wii. And the question with the Wii was, well, what the hell are you going to do to follow that up? And they followed it up with the Wii U, and it was a complete disaster. And when they released the Switch, people were kind of like, well, maybe this isn't going to be that great because the Wii U was a complete disaster. And it ended up being great. It ended up being a great investment for investors, including myself. But now I'm sitting here and looking at what's coming up next, and I'm like, well, what's next? And that's why the stock is down from where it was, because one, the earnings, if you look at them, and let's look at them right now, the quarterly earnings, they missed projections. And again, I don't often care about analyst projections, whether or not they miss it, they don't miss. What I do care about is if a company starts showing signs of slowing growth. And that's certainly what happened here. If you look at the 3 months ending in June versus the 3 months ending in June 2020, you went from 344 billion, I guess, yen, 358 billion total to 322 billion total. And the majority of that, if you look at where their revenue comes from, 300 billion out of 322 billion here and 339 billion out of 358 billion here came from the Nintendo Switch platform. So however you spin this investment now, it's an investment on the Nintendo Switch. Because while in the past, when they had the Wii, the DS was still pretty popular, the Game Boy was still pretty popular, the Switch basically replaced the DS. The Switch basically replaced the Game Boy, right? Nobody plays a Game Boy anymore because the Switch is a better Game Boy these days, right? And when they had a console, a home console, and a mobile console, there was a bit of variety in their revenue. Now there's only a home mobile console, right? It's all on the Nintendo Switch. And while a lot of other gaming companies have done a good job of transitioning into a more mobile world as well, when I say mobile, I mean phone games, these guys haven't, right? They have all of this IP, and that's really the crux of this investment thesis, and it always has been, and it continues to be like, wow, Nintendo has so much IP, they have so much intellectual property that's so worldwide and known. There's Mario, there's Link, Zelda, there's Metroid, there's Pokemon, and all of this stuff. And again, they don't own Pokemon fully. They own like 33% of the Game Freak, which owns the Pokemon company or whatever, so it's not fully theirs. But they really haven't done a great job of transitioning that outside of the Nintendo platforms, right? It's all on the Nintendo platform. And yeah, if you have a Nintendo Switch, you're going to be buying a lot of Nintendo games and making the company money. But if you don't, you're completely shut out, right? You're never playing Zelda on the PC. You're never playing Zelda on the PlayStation. You're never playing Zelda on the Xbox. And that's been the trend that these games have moved to as the world progressed to a more disconnected world, right? Everybody's on the internet. Everybody's playing games on the internet, whether it's via their Xbox or their PlayStation or their computer. And Nintendo has done an absolute shit job at transitioning into that world, whether it's mobile, phone gaming, or gaming online. Their online service for 2021 is absolutely putrid. It's like you pay $20 a year to access Nintendo Online, and it's just terrible compared to like whatever Microsoft offers or whatever Sony offers. It's absolutely terrible. Playing with your friends, terrible. Can't talk. It's just terrible. And the fact that you can only play their games on the Switch means that people who aren't willing to shell out $300 to get a new console, they're not going to give them the $50 or $60 that they would otherwise get from their software sales, which is where the real money comes from, right? It's the software sales. It's not the platform sales. Margin is made out in the software sales, and Nintendo continues to limit their ability to sell software by keeping it in platform. And maybe that's a good thing because they continue kind of holding the reins to their own quality. But from an investment perspective, it's quite annoying as an investor in Nintendo to know that they are so limited in their access, because you can only play Nintendo games if you have a Nintendo platform, if you have a Nintendo Switch. You can't really play Nintendo games otherwise. Even on the mobile, in the mobile world, they released a Super Mario game. It was a mediocre success. They released a Fire Emblem game, which was probably their best mobile game to date in terms of their income. They released a terrible Mario Kart game, and you would think that Mario Kart would be the perfect thing to monetize on a mobile platform, and yet they released a mobile game that is based on multiplayer that didn't have multiplayer until like 5 to 6 months into the game's life cycle. It's like, what are you doing, guys? You're completely messing this up. And that's why, even though they have all this IP, their revenue from their mobile franchises are absolutely terrible. And the reason for that is that Nintendo does a poor job. And this, as a gamer, this is a good thing, but as an investor, this is a bad thing. They do a poor job of monetizing their IP. If you look at popular games today, whether it's Fortnite, whether it's Apex Legends, whether it's Overwatch, or whatever you want to look at, Call of Duty, while those games make money on the initial sale, the $50 that you get when you first release a game, and then you drop that price immediately after 2 weeks to $19.99, the majority of their money is made after that by, selling skins, selling new power-ups, selling season passes, releasing continual content and upgrading the game for free, but continuing to make money off of monetization of some sort. Nintendo does a terrible job of doing any of that. They don't release DLCs. They don't release games every year like some of these other companies do. And while that's a good thing from a gamer's perspective because they put quality first, as an investment, that kind of makes you think, well, is that ever going to change? Because if it does, then Nintendo could be an amazing investment. If Nintendo ever figures out how to transition to mobile, it could be an amazing investment. There's so much potential money to be made on the mobile platform. And that while they've done that with Pokemon Go, again, most of that money isn't theirs because they don't own Pokemon fully. They don't own the Pokemon IP fully. Everything else has been a complete failure, whether it's Mario, whether it's Mario Kart, whether it's Mario Party. Why isn't there a Mario Party mobile game yet? Why isn't there a good Mario Kart mobile game yet? And it just boggles the mind of how poorly they've done this. And while they were lucky in that the Switch was very good and very well received, I think they were even more lucky that this pandemic happened. And that's crazy to say because the pandemic sucks, because it really forced people to find entertainment sources other than going outside. And the easiest entertainment source was video games, right? And that's why the freaking Nintendo Switch did so well. Even though it was released 3 years ago, it continued to see an appreciation in hardware sales beyond what it normally would have in this cycle because people were stuck at home. And that's why Animal Crossing did so freaking well, because people were stuck at home and they were willing to play that game way more than they otherwise would have. Not to say that Animal Crossing is not a successful franchise, because it is. My wife loves they even have a mobile game, actually. My wife actually plays the mobile game. She played the DS games and all of that stuff. She played the old Wii games. I think there were Wii games at least, or maybe a Wii U. I don't remember which one she played. And she plays the one on the Nintendo Switch. However, I think the last time she played that was like 6 months ago. And that's the problem, right? What's the future for Nintendo? So now as I look at Nintendo, having bought this thing at $20 a couple of years ago, and now, sitting on it while it was 80, and now looking at it at 60. I've still obviously had a really good return here, but what's the future, right? What does the future hold? And the future is kind of mediocre, at least from what it looks like now, right? The earnings were blah. They weren't bad, but they were blah. The balance sheet here is still very good. And then they announced a new version of the Switch coming out this year to kind of spur sales that is coming out on October 8th in 2021. But it's $50 more than the current Switch. And really all it changes is it gives you a better screen. So it's like, well, the main complaint for me as a person who plays a lot of games on the PC is that while the Switch does have a bunch of quality games, I don't really want a handheld that much anymore. The hardware just sucks in relation to some of the other consoles that came out recently, whether it's the PS5 or the Xbox. Is it the One? I don't even know. I don't own a console anymore. And while the games are solid, right, the hardware is going to start to lag, and you can already sort of see that in some of the games they're releasing. Like I mentioned, that new Pokemon game looks terrible. It's just it boggles the mind and how terrible it looks for a game being made in 2021. It looks like a game being made in 2014. That's the problem, right? That's the problem with Nintendo. They are falling into this trap that they fell in with the Wii, in that, hey, we have something successful, and what are we going to do about it? Because I'll tell you what I mean. So I'm going to go to Ticker, which is this new beta thing that I'm trying out. I'll leave a link to this below, but it's pretty awesome. It kind of gives you a lot of information here. So we can kind of look at what happened to Nintendo and see whether this worries you, what I talked about, whether this worries you. So look at this chart. If you're an investor in a company like Nintendo, do you like this chart? And remember, we're looking at the 7974 ticker that trades on the Tokyo Exchange. So in 2007 really, the stock basically peaked in the 585 yen range. Today, in 2021, without any splits, the stock is trading at $497. Sorry, this is in dollars. It's not yen. I'm sorry. So it's 570 whatever dollars, and now it's $497. I converted it to dollars. In yen, it's way more. That's a problem, right? If you invested in 2008, you might have gotten some dividends along the way, but this thing has been a complete dog of an investment. And why is that? Well, in 2008, 2007, they released this thing called the Wii, which, if you remember, was a huge success. Wii bowling was all over the place. Everybody was playing it. Everybody and their mother was buying it. It was a console that kind of moved past the traditional gamer that was present in 2007 and impacted everybody. After that, so they rode that success for a while, and then what was next? Nothing. They released the Wii U. The Wii sales kind of trailed off because that initial hype of the Wii bowling, etc., kind of died off. People weren't really all that interested in other games that were on the platform. Again, it was a weaker platform than some of the other ones. Does the story sound familiar? Sales started to trail off a little bit. What was next? They still had the DS at that point. They released something called the Wii U, which was the updated version of the Wii. Complete disaster. It sucked. I owned it. It sucked. Hardware sucked. Was behind the times at that point. Software wasn't that good either. The stock tanked. Stock tanked for a couple of years. Was a complete disaster of an investment. And even though Nintendo is a pretty solid company when it comes to managing their balance sheet, it was still kind of a depressing period to be a shareholder, and a lot of people probably sold out. Well, after that, they released the Switch. People were like, well, this thing looks pretty cool. My wife got one. She was like, wow, this is really good. A lot of my friends got one. I was like, well, this thing looks interesting, right? A lot of people are playing this thing. I started buying somewhere in this area. I don't remember where. The stock kind of, did well for a while, fell a little bit as people sort of lost interest in the Switch. There was more games released. Zelda was a big winner in that regard. More people started buying it for games alone because, hey, if you want to play Zelda, if you want to play Super Mario, if you want to play Pokemon, you have to own a Switch. So people got into it again. The hardware was okay at that time because it was kind of in the middle of the cycle. Then the pandemic hit and more people started buying stuff, even though the hardware was a bit old. The Xbox and PS5s that came out in the same time frame were sold out everywhere, so people kind of looked elsewhere for entertainment. The Nintendo Switch was a big beneficiary of that, and the stock did very, very well. And then the question became, well, as we come out of this pandemic, what's next? And that's the issue here. Like, what's next? You know, you've got this OLED model coming out. Don't really know where that's going. I don't think it's going to be that amazing. There's some news about a Nintendo Switch Pro coming out in the near future, better hardware, but kind of still the same game mechanics. Do people want that? Are people kind of tired of the handheld desktop or TV dynamic? Do people want something different? Will the Switch Pro just be more of the same? Is that going to be enough for investors? If you kind of look at this screen, if we go back to the financials, you know, they kind of tell the same story. Here's the deal. If you go back to, 2000, are we in USD here? Yeah, we're in USD. 2006 to 2008, where you saw that massive growth. Well, here it is, right? Your revenues were from $500,000 to almost $2 billion by the end of 2009, simply because the Wii was a massive success. Well, they thought that would last forever. It clearly didn't. The Wii U was a complete failure. The revenues were back down to $500,000 by 2017, right? So you went from having $500,000 in revenues, $500 million, sorry, to less than $500 million by 2017. Is that a good investment? Clearly not. I mean, if you bought and you were over here and were selling over here, you were screwed, buddy. But again, Nintendo didn't rest on their laurels. They did something with it. They released the Switch, and the revenues soared back, right? So you went back from, sorry about this, you went back from $500 million here, back up to almost your highs in 2009. That's still kind of questionable, right? This is a company that went from nearly $2 billion in revenue to a bit less than that, nearly $2 billion in revenue in 2009 to a bit less than that in 2021. So essentially, if you compare 2009 to 2021, zero growth. So this tells me that Nintendo, because of their dependence on their hardware, and that's the point I'm coming back to, is a very cyclical company. And that's why it makes a tricky investment for me. You have to time this investment correctly in order to make money on it. That's why buying it in 2017 before the uptake was the key here. That's why buying it in 2006 before the uptake was the key here. Because what came after that, after 2006 and after 2017, good hardware that got people to buy their software, right? Because their software is locked behind a paywall, being Nintendo hardware. You can't buy their software on the PC. You can't buy it on the Xbox platform. You can't buy it on the PlayStation platform. They are not platform agnostic. They are consistently on their own platform, the Nintendo platform. So if the hardware sucks, if the hardware is not popular, the software is not going to sell, right? So while we're in a spot where the hardware is really good, what's going to happen if the hardware in the next iteration isn't that good and people just don't care to buy it? They're screwed again, right? This stock is going to fall back to $20 per ADR or whatever it was back here, even probably a bit less, because there's going to be a small amount of people owning their hardware, and their software shares, which is where they make their margin, are going to suffer. And their ability to transition to something like mobile hasn't been shown in recent years, so that's not really out there as a potential upside. I mean, it should be, because they have so much IP, but they're not really doing anything good with it. So that's a problem for investors. So what's next is the question, right? Is this going to continue going up? Is the Pro going to be a success? Will they be able to maintain their revenue? Because at the end of the day, this revenue and the product they offer leads to pretty solid cash flow and has allowed them to build a pretty solid balance sheet in the recent years. So if you look at Nintendo, Nintendo is maybe a like a 50, are we in USD? We are in USD. I don't think this is right. Yes, convert to USD. Right, there we go. So nice. You can convert to USD. So Nintendo, as of right now, is about a $59 billion market cap company, right? They have about $14 billion in cash on their balance sheet. And that's driven by the fact that they have been pretty good stewards of their balance sheet. They don't take on a lot of debt. When they produce free cash flow, they keep it on their balance sheet. They use it to buy back. They recently announced a stock purchase program, and they also issue dividends when that happens. So you can kind of see, hey, we've produced, sorry, my bad. We've produced, hey, $3 billion in free cash flow in the nearest 12 months. In the year before, it was close to $4 billion. Pretty solid cash flow company when they're doing well. When they're not doing well, they can still not lose a ton of this cash flow. The problem is, one, what are they doing with this money? And that's the issue running with it. The second issue to run into with Nintendo. Sorry about that. One, they're conservative. They have $14 to $15 billion worth of cash on their balance sheet, and they're using it to buy back stock. They're not using it to do anything that would probably improve their business, at least right now. They have bought a studio here and there when it comes to gaming, but other than that, they kind of just sit on their fortress chest of money because they want to be safe when something like the Wii U happens again, if something like the Wii U happens again. And when a company's doing that, when they're not utilizing their cash to grow, that makes you wonder what the management is worried about. And that's kind of Japanese culture too. They're worried about, hey, making sure that we're able to provide for our employees. It's a good thing from a company culture perspective. From an investment perspective, not really a great thing. Why aren't they using this $14 to $15 billion in money to acquire something that would help their mobile space, that would make their revenue not so dependent on the Switch, that would allow them to develop games better and increase their revenue from mobile, which is a higher margin business. If you look at their competitors right now, the way the market's valuing them is very, very low in relation to what they've achieved in the last 12 to 24 months, right? If you look at them compared to Activision Blizzard, which has had a ton of issues on their front with a lot of stuff, you're basically paying 3x more for Activision Blizzard in terms of revenue. You're paying almost double the EBITDA in terms of their revenue. You're paying the same amount of free cash flow, but still, the idea here is if you look at Nintendo outside of the issues we talked about, they're very fairly priced. And that's why you'll see a bunch of posts on certain message boards like, hey, you should be buying Nintendo because of these multiples. The problem is, what do these multiples tell you? And what do they tell you about what the market is thinking about the company? Well, the market is thinking about the company. And I think what the market's thinking about the company is that they're coming into this inflection point in their life cycle that either takes them two ways. One, the Switch continues to be a success into the near future. The next 5 to 10 years are what they've been in the past. And even if the revenue reduces a little bit, even if they don't grow a bit, I think this could still be a very solid investment if that's the case. If the Switch continues to be a success, if they're able to do well with the Switch and continue to sell a lot of hardware units to drive software sales and maybe throw in a pinch of mobile sales on the side, this is a good investment today. However, what the market is pricing in right now is the fact that Nintendo has had a history of doing poorly after a massive success such as the Switch, right? If the Switch is what the Wii was, and the Pro or whatever follows the Switch is what the Wii U was, today's prices are going to seem like a rip, right? Because their revenue is going to fall straight down. And you saw that before. You went from $2 billion in revenue down to $500 million. Right now you're sitting at near $2 billion in revenue. What's happening next? They're already slipping a little bit from what they saw in the last 12 months as their earnings showed. They don't really have anything going on for the rest of the year. There's this OLED model and a Metroid game and a couple of other games. But really the big selling point is going to be the next Zelda game that's coming out next year, and there's no mobile games on the horizon. So if this OLED version isn't a real revenue booster, and if the Switch Pro isn't out until like 22 or 23, and sales of games start dropping off, you can't really depend on an Animal Crossing every year, because that was really, I think, partially driven by the pandemic, then this could be a mediocre investment, even though these historical revenues and valuations are so favorable to all these other entertainment vehicles, whether it's Activision Blizzard, whether it's EA, whether it's Take-Two Interactive, right? You're basically getting Nintendo at a much more favorable valuation because all of these other companies are growing and they have a business that's not dependent on their hardware doing well. Activision Blizzard doesn't really care if the PlayStation is a winner, if the Switch is a winner, if the Xbox is a winner, if the PC is a winner. They serve all of those hardware systems equally, right? And they make more money via monetization of their games, via DLC of their games. They're making a boatload of money off of Call of Duty right now, whether it's mobile or not. They have a mobile division through their acquisition of King. Hey, they used their money to acquire something on mobile that's now their second biggest business, even bigger than Blizzard, which is going through some troubles right now. Same thing with Take-Two Interactive. They're making so much money off of GTA Online. What does Nintendo have that mirrors that? Absolutely nothing. The gaming ecosystem is moving online, and Nintendo is behind that curve, right? As long as their Switch does well and they're able to sell their software, they may still do okay. But that's a big if in my mind. And the reason I say that is because gaming moves at a rapid pace, right? People aren't playing the PS4 anymore. They're playing the PS5, and pretty soon they're going to be playing the PS6, right? If the Nintendo Switch Pro is coming out in 2 years or whatever, and it's just as good, or even it's probably going to be worse, let's be honest, than the PS5, and then the PS6 is a couple years down the line, you're going to have the same problem, right? It's going to be the same thing as when the Wii U was released, and it was lagging in hardware, and it was lagging in software, and people were just looking for different things. And there's always going to be this cohort of Nintendo loyals, and I get why, right? Nintendo does good by the consumer, for the most part, right? They don't monetize you too much. They release games that are quality. They don't rush them out the door half the time. The only annoying thing is that, and this is good for investors, Nintendo basically never lowers their price. If you look at a Zelda game right now that was released maybe 2 or 3 years ago at $59.99, it's still $59.99 today. Good for them. But on the opposite side, they're not really making any money on that Zelda game beyond that, right? They're not monetizing it in any way. They're not releasing DLCs, and they could, right? As an investor, that's kind of annoying, to be honest, right? Even as a gamer, that's kind of annoying. Maybe I want to play more DLC in that Zelda world. It was a great world. Why aren't you giving me something that I could buy for $19.99? Open up a new map for me or something like that. Why do you have to release it in a new game? Why not continue that? Add some multiplayer aspects. Improve your online service. Do something. Buy something with the $15 billion you have as a company to improve your mobile space. You're completely failing on that. And now your business is so dependent on the Switch, just like it was on the Wii rather, that if the Switch doesn't do well in the next 2 or 3 years, Nintendo's going to be boned again. They're going to have to come up with something else, or they'll have to become platform agnostic. Right? They'll have to say, listen, maybe this hardware business is just too hard for us. The money isn't made on hardware. And that's completely true in Nintendo's case, I think. People don't buy Nintendo hardware because it's really good. They buy Nintendo hardware because it allows them to play Nintendo games, right? And that's the key part here. I want to play Nintendo games. And right now, in order to do that, I have to buy a Nintendo Switch. There's really no other way to do it. If in the future, if in a world where the Switch doesn't continue to be a great success, if Nintendo makes the change to, hey, maybe we're not a hardware company. Maybe we should continue making these really, really good games, but let's put them on the PC as well. Let's put them on the PlayStation. Let's put them on the Xbox. Sell them for the same amount of money, but now we have access to this whole gaming ecosystem that we don't have access to right now. And maybe that's the way forward for Nintendo. And that's kind of what I've always been hoping would happen with Nintendo, but it really hasn't. When I saw the Switch was doing well, I bought into Nintendo. And I won't lie, I've sold a little bit since then because the amount of profits that I've made on that initial purchase was, you can't complain about a 3 to 4x. And now I'm sitting in a position where I have a much smaller position and I'm looking at this company and I'm thinking, can this continue to be what it's been in the past 2 to 3 years? Or have investors just gotten lucky with how popular the Switch was? Because really, this company is so dependent on the Switch, you have to hope as an investor that the Switch continues to be a success. And maybe it will be, right? And I'm still holding on to the shares because I think the valuation is still relatively decent in relation to what you're getting. But I also know that I'm not getting something that's without risk, right? If I look at these valuations, I may think, wow, look at this. If this goes up to 8, if this 8.7 goes up to 15, it's such an easy win. But I don't think that's true at all. I think the stock is priced where it is for a reason. I think that reason is very reasonable. Reason is very reasonable. It's a very real risk that exists with Nintendo. And it's happened in the past, and there's no reason to say that it won't happen again. Because if the Nintendo Switch OLED is a complete disaster, if it doesn't sell at all, which it might not. I mean, who cares about a new screen? None of my friends or anyone I know is really buying it. If it's your first Nintendo Switch, then sure, buy that one. But if you already have one, there's really no reason to upgrade. Then you really have to hope that the Nintendo Switch Pro or whatever they come out with after is a big success and continues selling. Because if it doesn't, then this company is doomed to repeat the mistakes of the past, right? And there's a couple of ways to fix that. I've talked about them. Hey, become platform agnostic, stop focusing on the hardware, buy something that will allow you to do a better job with the mobile space. Because the IP Nintendo has is valuable, but the way they monetize that IP is absolutely terrible. And that's really the crux of this company, right? This company should be worth a lot more than it is right now. If they did a good job of monetizing this thing, this stock, this ADR at $60 should be closer to some of these companies. It should be $100+ stock. But that all depends on what the company does in the next couple of years, right? And while I think the likelihood of it going to 100 is just as likely as it is going to 20, I'm going to continue to hold my small position because at this point it's free money. I've essentially made all of my money back and more. Would I buy it today if I didn't own any shares? I don't know. I probably would wait a little bit to see what the response is to the OLED, to see how some of these new games are shaping up, to see if there's any more information about the Nintendo Switch Pro. I think there's too many unknowns about the Nintendo Switch, which is the main moneymaker of the company, for me to go all in right now. I'd probably be careful about moving a lot of money here. I do think there's potential short-term upside if there's some good news about the OLED, if there's some good news about the Switch, because again, the valuations are solid. But from a long-term perspective, and remember guys, this is a long-term channel, there's too many unknowns. With Activision Blizzard, there's some unknowns there around everything that's going on with the way they treat their workers. But with companies like Electronic Arts, Take-Two, I think video gaming is the best bang for your buck entertainment source, and I think that's going to continue to be the case in the future. And I think video game companies are going to do well into the future. And I think their valuations are still depressed versus where they should be. I think there's still a lot of monetization opportunities for all of these companies, and especially Nintendo, to improve their margins, to improve their earnings. And because of that, I'm an investor in all of these companies. I have shares in Take-Two, I have shares in EA, I have shares in Activision Blizzard, because I think video gaming is still a vastly untapped source of monetary rewards. And you may say that, well, I think that's crazy. But again, most of these companies are like $15 billion, $40 billion here, $50 billion here. And these are, in my mind, entertainment juggernauts, right? And they're well below where they're going to be 10 years from now, in my mind. And Nintendo is at the forefront of that if they could execute as well as some of these other companies, if they could monetize as well as some of these other companies, because they have better IP than almost all of those, pretty much all of those other companies. I mean, their IP doesn't quite rival Disney. It's not anywhere close to Disney, in fact, but it's up there in terms of worldwide knowledge. The problem is that's not going to last forever. People aren't going to be into Mario forever if they don't see more of Mario. And I think there's a Mario movie coming out. They're doing things in that realm. But I think they have to do more. They have to get all of that IP out on the mobile space in a way that is bigger than what they've done already. They have to get more people either playing the Switch or become eventually platform agnostic so that they could allow more of the gaming space access to the high quality games that they have out there. And they haven't really done that. And while the stock has been a good returner in the last couple of years, right, you still have to remember that just a couple of, just a decade plus ago, they were in the same exact position and they completely squandered that. And that's not to say that this company is going to go bankrupt, but if you're buying at 60 and the stock is at at 60 for the ADR and the stock is somehow, back to 25, 30 a couple of years from now, it won't be a massive surprise to me. However, if they can execute, if management can do something with this Switch, if they can continue making it a good value proposition, if they can continue releasing really good games and making sure that the hardware penetration is there, then this stock could really go up to $100 plus based on the valuations for some of these video game stocks, which are in turn, in my mind, undervalued anyway. Then I think this stock could have a long ways to go, and that's why I think this is becoming an interesting discussion at this point and why I wanted to talk about it. But I do think there's more that needs to be done here, and I wouldn't be comfortable putting a ton of money into this. But a small position, sure. If this stock ever drops back into the 20s again, I'll be like, yeah, why not? I'll buy a bunch more, because I think that's where it gets really interesting. It's been a cyclical player. They historically haven't done an amazing job of monetizing their IP. The story, the thesis is, well, this time is different. But is it going to be different? If it is, this could be a really amazing investment. If it's not, then hey, it's a repeat of what we saw in the past, and investors have to be wary about that. So, guys, let me know what you guys think about Nintendo. As always, remember, I am not a qualified financial advisor. I'm just doing this for fun. Hopefully you enjoyed this. If you want to check out Ticker, I think this is a very, very cool beta that you guys should be into if you're investors. I'll leave a link down below. I'll leave a link to some of these links down below as well. Thanks for watching. Hope you have a good day, and let me know what you guys think about this Nintendo video. Let me know what you guys think about the stock. As always, like, subscribe, all of that good stuff, and I'll be back with more videos in the future.